What's up guys, welcome back to the channel. Today I will review a top secret of supply and demand, starting from how supply and demand zones are created down to the psychology behind supply and demand. I will equally touch on why you need to wait for price to get to the right supply and demand zones. That is talking about the right supply and demand zones to trade from. I'll tell you things you need to see and things you need to identify to know that this is the correct supply or demand zones to trade from. If you are totally new to this channel, consider subscribing to the channel. I'm Solomon Wisdom and here is Born to Trade. Over here we talk about smart money concepts. Okay, so consider subscribing to this channel. Let's jump straight into it. Supply and demand zones. Talking about supply and demand zones, you know, we buy from demand zones and we trade from supply zones. Now, how are supply and demand zones created? Supply and demand zones are created after price moves out of a consolidation area. Before I start explaining how supply and demand zones are formed, there is something I need to make clear before we continue. You know, we have two ways supply and demand zones can be created. Firstly, we have what we call a range created supply zone and a range created demand zone. In this case, we see price rapidly moves out of a consolidation area before that type of supply or demand zone is formed. And secondly, we have what we call a pivot created supply and demand zone, which most people usually call the order block. So that's what we call the order block. But in today's video, we'll be focusing mostly on range created supply and demand zones. Okay, so that's what I'll be explaining in today's video. So later on we can still talk about some other types of supply and demand zones, but in today's video, like I said, focusing on range created supply and demand zones. So how is a range created supply and demand zones formed? How are those type of supply and demand zones formed? So a range created supply and demand zones, let's start with a demand zone. Like I said, we look to buy from a demand zone. Now, how is that kind of demand zone formed? So in this case, we might see price actually moving calm. Okay, price is moving calm, no clear movements, it's moving calm. So price moving calm simply means that price, there is no significant movement. Okay, so let me stop here right now and explain this. I have to change this color to black so it will look better. So at this particular area, price is in what we call a range, and over here buyers and sellers are trading fairly. Okay, you see sellers took a sell right here at this area, buyers took over at this area, sellers took over at this area. It's okay to say that supply and demand is equal at this area. Okay, so at this area we can say that price is fair. Okay, because buyers and sellers are happy, sellers sell at this area and buyers buy at this area, so we can say that price is fair right here. Supply and demand is equal at this area. Okay, price is moving calm and price is balanced, there is no inefficiency, price is balanced at this area. So after that, what do we see price do? We see a rapid expansion out of this area. So this rapid expansion out of this area, it means that demand has been created at this area. Okay, so there is a demand zone at this area. So since price rapidly expands out of this area, it explains that there is more demand. People are willing to buy. All the institutions, all the banks and billionaires, they are looking to buy. After price moved calm and we see this expansion, a demand zone has been formed at this area. So now that demand zone has been formed, and like I said, the institutions, the big banks, the billionaires, they are looking to buy. And what you need to understand is that since price has expanded out of this area, which means that there is more demand at this area. This area, price was moving calm, price was balanced here, no inefficiency. Okay, no inefficiency between buyers and sellers. But at this area, price expand, which means there is an imbalance right here, and we have a demand zone at this area. Like I said, it means that a lot of people are looking to buy. Now, since they are looking to buy, it doesn't mean that they're gonna look to buy at this area, because at this area price has already moved away. Okay, we might see some kind of price action like this. You see price maybe making some kind of movements. The momentum price moved out of that range has been exhausted. So the big banks and the institutions, like I said, they won't be looking to buy at this area. They'll be looking to trade from a demand zone. Trading from a demand zone is not only the case. They will still look to trade from a discount price. And what is a discount price? A discount price is a cheaper area. So how do we measure that? We can actually measure that with our Fibonacci tool, measuring from the low of the price action to the high. So this is actually the settings of my Fibonacci tool, the ones that are ticked are the settings, so you can go ahead and use the same setting if you like. So this red area right here, from this red zone and every other thing that is below here, this is the discount area. It means that price is cheap at this area. Any other thing you see at this side, it means that price it's costly at this area. Let's say at this area, if you want to buy from this area, you're going to buy at the rate of $5, which means that price is very costly at this area, and buying from that area isn't nice. So the banks, what they do is they're going to wait for price to come into these cheap areas. You could buy at $1, which means that price is cheaper at that area. So you can use the Fibonacci tool to measure, to know a cheaper area to buy from. Okay, so that's it. And remember, the whole of this range is your demand zone. But another thing you need to understand is that zones can be refined. Okay, because remember, when price was at this range, what did I say? I said that price was balanced, there was no inefficiency, price was efficient at that area. So what you can see is that price moved out, creating imbalance, leaving a demand zone right here. What price is basically going to do is to come back to this area just to rebalance price. Price coming back to rebalance price means it's going to fill in the inefficiency that was left, and it will equally look to mitigate a demand zone. So it's okay to refine your zone. Everyone has different ways of refining zones, so I will equally show you how I refine my zone. So you can refine your zone down to this pivot right here, to this slash push to the downside before this rapid expansion to the upside. So it's okay to refine your zone to that area, and you can then wait for price to return back to your zone, and you can actually trade from there. Okay, I hope what I explained is very clear and you understand exactly what I just explained. Another thing I want to quickly touch on is that we might not always have a very large range like this. Okay, we might not have a very large range like this. In some cases, we might see price form few exhaustion candles. Price might form a smaller range, very small, okay, before that rapid expansion. What you just need to understand is the psychology behind it. Okay? Just understand that it's just the same thing. It doesn't matter if it's a larger range or a smaller range. Okay, so the same thing goes for a supply zone. I just explained for a demand zone, and I said that we buy from a demand zone. Now let's talk about a supply zone. How is a supply zone formed? It's just the opposite, or we say the flip of the demand zone. So in this case, we see price moving calm. I said it could be anyhow, as long as price isn't giving us a significant move, like a rapid move. That's still a range. You see over here, price was moving calm, no clear price action right here. Price was just moving calm, more like a range over here. What I explained is that buyers and sellers, we are trading fair. You see sellers sell from this area to this area, and buyers took over to this level, and you see it was going and everyone was enjoying and everyone was happy because supply and demand is equal at that area. Everyone was buying at that area. At some point, what do we see price do? We see a rapid expansion to the downside. So when we see this kind of rapid expansion, you should know that zone has been created over here. Why? Because we have this range where we have a balanced price action, and now we have this rapid expansion to the downside, which surely will create an imbalance, because this candle right here is going to have momentum, right? It's going to have momentum. You should know that your supply zone has been formed at this area. Just like I said, you want to trade from a cheaper price. Okay, so you, in this case, since it's a supply zone, we're going to trade from a premium level. So this area after the red line, the 0.5 level to the upside, you can look to trade from any zone from that area. Okay, that's your premium level, just like I explained. Now you could map out your zone. This is your zone right here, and like I said, you can actually refine your zone, and I said I will touch on zone refinement. Refine your zone, still wait for price to navigate back to that level, and you look to trade from there. And remember, I said we have different kind of range in some cases you might get a bigger range, and in some cases you might get a larger range. And price moving calm doesn't necessarily mean it should be in this range, as long as there is no significant movement. Maybe price is moving, no clear price action, price is moving very slowly, you can identify that as your demand or supply level. So this is what it looks like. So let me just show you examples quickly on the price chart. Okay, so that's what I'm gonna do right now. I will show you examples right now. Okay, so zooming in, let's see what we have over here. Now, looking from this area, what you can clearly see is that price was in the downtrend over here. This is AUD card, the 1 hour time frame. Price moved to the downside, and over here we see a shift in market structure. And I hope you can read market structure very well. You need to know how to read market structure so you can be able to read any price action you see on the price charts. Now, looking at the price, what we can clearly see is that we have a break of structure to the downside over here. This is very clear, a break of structure. Price moved with momentum. After that, we see a pullback. The pullback didn't actually get to this zone right here, because surely we have a zone which we'll be looking to trade from over here. Price didn't get to the zone. After that, we see price pull back. The pullback mitigates some kind of wick right here, and if you go down to the lower time frame, you will see maybe we have a zone at this wick. After mitigating the wick, what we see price do is price push to the downside, breaking structure to the downside. Now, there was something I didn't really point out when I was explaining. After price must have moved calm and rapidly expands out of this area, price should break structure. Okay, you should see a break of structure. Sorry, I didn't talk about that. So what I'm basically talking about is after price must have moved calm and we see that rapid expansion, which explains that this is our range, price should break structure. Okay, we should see something like a break of structure right here. Okay, when you see price moved calm and it didn't break any major structure, just like this, after it must have moved calm, it didn't break any major structure, I don't think that's a valid demand or supply zone. We want to see price take a high. Okay, we want to see price break a structure, okay, before coming back to mitigate and stuff like that. So that's what I forgot to point out as I was explaining during the theory part of this video. So in this case, price broke structure to the downside. Now if you try to look what we have here, you can clearly see that price was moving calm at this area. Look at the price action over here. You see price was moving calm, no clear movement over here. You see price was very calm. That's what I was explaining. It must not be a range as long as price is moving calm before we see some kind of rapid expansion to the downside or to the upside. You should know that price has created a supply or a demand zone at that area. So in this case, what you can clearly see is that price was just moving calm at this area. Price was just moving calm, and after price moved calm for some time, we see price rapidly expands to the downside, which explains that a supply zone has been formed. So now that supply zone has been formed, what is our expectation? Our expectation is that price is going to come back into this supply zone that has been formed, and we're going to see a push to the downside. And if you try to look, you can see that the price action here is efficient, and after price rapidly pushed to the downside, you can see that we have an imbalance has been created, and our expectation is that price is going to fill in the imbalance and mitigate your supply zone. So what you're going to do right now is to map out your supply zone, and mapping out your supply zone, the whole of this area price moved calm is your supply zone. Okay, this is your supply zone, and a lot of people will say this zone is very large, and that's the truth. This is a very, very large zone. If I try to measure this zone right now, you see that this zone is about 30 pips. The zone is about 30 pips, and where is your target? Here is your target. Your target is what? Your target is 46 pips. The risk to reward is not really favorable. This is about 1:1.5 risk to reward. I mean, I don't think this is up to 1:2, not up to 1:2 risk to reward ratio. This is about 1:1.5 risk to reward ratio, and it's not really a favorable one. That's why I said zone refinement is important. You can actually refine your zone and wait for price to come back to that. So if I want to take this setup personally. I will show you how I refine my zone and how you can actually refine your zone to make the best out of this trade. So refining my zone, this is how I'm going to refine my zone if I want to take this trade. This is exactly how I'm going to refine my zone if I wanted to take this trade. And someone will ask me, why did I choose to refine my zone that way? So if you look, we have two bullish candles right there. After the two bullish candles, what we can see is that we have bearish candle. We have 1, 2, 3, 4, 5. Okay, you see that after the bullish candle, momentum kicked into the market, and you see we have an imbalance right there, which I said is very, very important, and we equally have a larger imbalance over here, and most importantly, price broke structure right here. So these are factors you need, these are things you need and you should identify. Now I've actually defined this zone and trying to measure the zone once more. What you can see is that we now have a zone of about 16 pips. Okay, let me measure this well. From here to here, the zone is about still 16 pips. About, let's say if you approximate it, it will be about 17 pips, because I will place my stop loss few pips above the zone. Okay, so let's say, okay, let's just increase it more. Let's say our zone is 20 pips including allowance for spread, and now our target is about 45 pips. So this one is a favorable trade for us. It's a favorable trade, and what you can actually see is that price comes back to that zone, feeling the inefficiency right there, the imbalance there. Price feels the imbalance, mitigates our zone, and we see a push to the downside, which breaks structure to the downside. And this is exactly how supply and demand zones are formed, and this is how you can actually trade these supply and demand zones. Moving forward, you can clearly see over here that price actually moved calm again. You can see it. This is very, very clear and easy to identify. You can see over here price moved calm. After price moved calm, what can we see? Buyers and sellers is equal. Over here you see that they were trading over here, and after that we see price expands out of that area. And when price expands, like I said, price expands, breaks structure, it explains that a supply zone has been formed. Why? Price expands to the downside. Assuming price expanded to the upside, would have said that a demand zone was formed, but in this case you see price expands to the downside, which explains that a supply zone has been created at this area. And what you can actually see is that we have inefficiency, a lot of imbalance right here, which is necessary that price is coming back to filling this inefficiency. Now trying to map out your supply zone, what did I say your supply zone is? Here is your supply zone. Okay, the whole of this range, this is your supply zone. This is your supply zone, and like I said, it's always large. You won't see anyone mapping out in supply and demand zone this way. So after it's been created, there is need for zone refinement, because most times after price forms this range, we do see a larger range, we do see a smaller range. So after price forms this kind of range, it's necessary to refine your zone. Okay, now that we have a large zone, like I said, no one is going to trade this kind of large zone, because if we look here, we have about 35 pips. Okay, you can actually say it's 36, and the target right now is about 26 pips. So this is not a favorable trading setup. So what you're gonna do right now is that you're gonna refine your zone. So trying to refine this zone, like I said, the way I do, I'm gonna refine it down to this area. And why am I choosing to refine this zone down to this area? What can we see from here? What you can see is that we have a bullish candle right here. After the bullish candle, what can we see? We see price push to the downside with multiple bearish candles. You see, we have the first, we have the second, and we have the third bearish candle. So that's a good zone. And if you actually use the Fibonacci tool to measure, to be sure that your zone, that the zone you chose is at a premium area, you can see the zone we choose is at our premium area and is a good zone to trade from. And trying to measure that particular zone, you see price is about 13 pips, and now your target is about 33 pips. So it's a good trade, and price returns back, mitigates your zone, and push to the downside, breaking another structure. So that is it, and this is how these are created. I need you to understand exactly how it's created, not just trading supply and demand zone. You watch mentors teaching you about supply and demand zone, you go about trading them without actually understanding exactly how it's formed and how these zones are created. Okay, so in this case we have more like a pivot created supply zone right here. Okay, more like a pivot. Mostly you're gonna hear order block. So that's what we have at that area, and we see price expands to the downside. It comes back, price comes back a little more. It couldn't mitigate this particular zone right here, a little push to the downside. Now you see price giving us a change of character over there. Okay, so a change of character. So if you actually wanted to trade from any zone right here, it would be a failed trading setup. Okay, it will be a failed setup, and you have to understand and accept that. Okay, you have to understand and accept that it happens in trading. Actually, this week happens to be one of my worst week. Okay, this is the first week of May, and 2 of my setups failed. I lost 2 trades, and the one I was hoping to recover from, price didn't actually get to my zone, and price came very close to my zone and reacted. If you see the massive move to the downside, a massive move to the downside, and I couldn't get involved because price didn't get to my zone, but it came very close to my zone, about 8 pips close to my zone. Then price left, and I actually lost 2 trades this week. So it's normal and it happens. The best thing and the most important thing is that you will always recover and you still make money from the financial market. So if anyone tells you that you will always make money and you won't lose money from this financial market, I'm telling you the truth, the person is telling you a very big lie, a very fat lie. You will lose money and you will still make your money back. And the most important thing is working on your risk management. So if you lose a trade, you're gonna recover and still manage your money and your capital very well. So continue to explain what we have here, a change of character. I don't need to start explaining. Over the past weeks, I've talked about change of character. So I'm not going to say anything about change of character. This is a change of character, which signifies shift in market structure, as simple as that. So at this area, what else can you actually see? Price moved calm again. So price moved calm, and we have this candle with momentum pushing to the upside. We have this change of character, which tells us there is a possible shift in market structure. What you need to understand is that a demand zone has been created at this area. At first, supply and demand zone were equal, and after that we see price pushing with momentum to the upside, creating this demand zone. So if you want to trade, you come back the same steps, your demand zone. Okay, the same step, this is your demand zone being created. And if you actually want to refine, you can actually refine down to this candle, including this. You can see that bearish candle in there, you can actually include that. Now we were actually waiting for price to return to mitigate the zone, and price pulled back. After the pullback, a push up and a continuation to the upside. Now you can actually see price moved calm once more. Price moved calm before pushing to the upside. And now a lot of people will actually be looking to trade from this area, because truth be told, there is a demand zone over there. But if I wanted to take a trade, I won't be interested in this whole range, because this is a very large range. I won't be interested in trading from that range. Instead, I will be interested in trading from this smaller range right here. And someone will ask, why do you make such a choice? If you look closely, you see we have this range right here. Let me draw it and explain exactly. We have this range, which is a very large range. At first, we have this imbalance right here. Price push to the upside, feel the imbalance, push to the downside, creating another imbalance right here. Now price push to the downside, feeling this imbalance, and now we have a momentum to the upside, price pushing to the upside, leaving this bearish candle right here before we see this bullish move that has this imbalance right here. You see this imbalance. So if I want to trade, I'll be interested in this area, because there is nothing left at this area. Price has mitigated, everything has been mitigated at this area. Okay, the price action over here is balanced, but if you look here, we have an imbalance and we have this little zone right here. So I'll be interested in trading from this particular zone. So anyone that took a trade from that particular zone I pointed out, you would have got some pips, got about 42 pips before the zone failed to hold price. The way I trade, if I see this kind of setup, maybe after this particular one failed, what I'm going to see right here is that this is more like an inducement area. Okay, I can call that an inducement area, or I can actually say that price builds liquidity above our zone to increase the probability of this zone at this low to play out. Okay, that's what I'm gonna say. So but what we see is that price spikes below the low. You see, if you actually used your pending order right here, you lost this trade. So price spiked below the low and pushed the upside. So if you actually used confirmation entry, it would have been a good trade for you, because you would have gotten your entry at this area, and you see price pushing to the upside. Okay, it takes this high before we see this pullback and the continuation to the upside. I think I have to show you maybe one more example before I end this video. So this is the second example I will actually show you before I end this video. This is Euro USD, the 1 hour time frame. What you can actually see over here is that we have a larger range. This range is larger, and after that we see price expanding out of the area, even though we don't have a more neat expansion like we've been seeing in other examples. But what you can actually see is that after the range, supply and demand being equal here, we have a fair price over here. We have a fair price where buyers and sellers are trading fairly. You see sellers sold to the downside, buyers bought, sellers sold, buyers bought, sellers sold. So price is fair at this area. Okay, after that, what do we see? The expansion out of that area, which tells you that there is more demand in the market. So like I said, there is no inefficiency right here. If you look closely, if you can actually look closely, check and see if there is any inefficiency right here. I know you know how to identify imbalance. If you don't know how to identify an imbalance, check out other videos I explained and I talked about how to identify an imbalance. So there is no imbalance at this area, so I won't be looking to trade from this area. Although if you want to do it correctly, originally the way it's done, this is your demand zone, but you're not going to use this zone because it's too large. You're going to refine this zone maybe to this candle right here. You see this bullish candle, it engulfed this bearish candle, so you can actually map this out as your demand zone. And you can also see that we have an inefficiency right here. Here is more like an inducement area. Okay, this is more like an inducement area. A lot of people will be looking to buy from here, so this is an inducement area for me. Now what do we see? Price come back. Those that were induced into taking trades, they were taken out. Price mitigates this zone even though it spikes below the zone by some pips. So let me do it correctly. Okay, so this is my zone and price spikes below my zone with how many pips? About 1.3 pips. Okay, you can see that price spikes below the zone with 1.3 pips. So that's why it's okay to give allowance for spread and stuff like that, so you can cover up in case price spikes below your zone. Okay, so price spikes below the zone, and now you see that expansion to the upside. You see that expansion, very rapid expansion to the upside, which breaks structure to the upside. Now remember what I said, we don't usually have a larger range like this. In some cases we might have a smaller range, and what you can clearly see over here is that price was moving calm. The most important thing you should identify is an area where price moved calm, and you can see price moved calm, very calm at this area, more like nothing is happening at this area. A weak price action right here, and after that you see this expansion to the upside. So it's okay to map out your zone right here. And for me, if I map out this zone right here, I might not really refine this zone. I might not really refine it because it's a smaller zone, but if you want to refine, it's still okay to refine this zone this way. But if you don't want to refine, the zone is still fine this way. And you can see we have a lot of inefficiency right here, which price will come back to rebalance. Now price came back, rebalance price, and you see price spiking below this zone once more. Okay, you see another spike. So this is very necessary because these days you always see spikes taking you out of your trade. So this spike, this particular one, about 2.3 pips. So after the spike, you see a reaction. After the reaction, the zone failed, although we got a reaction first before the zone failed. And if you try to measure the move, price moved about 63 pips and this zone is just 17 pips. So you must have caught a few pips before price reversed and the zone failed. So this is exactly how supply and demand zones are created. These are very important things you need to understand and practice. So like I always say, I've explained this. Your job right now, I've done my own job by teaching and explaining this concept. So you have your own work to do. You have something to do. The assignment I'm giving you right now is that you should go back to your price charts. Look at this range, those areas price ranged before the rapid expansion that broke structure and price left an imbalance. See how price reacts to them when it's come back to those areas. Okay, see how price reacts to them. Don't just learn and start trading it blindly. Like I always say, go back to your price charts and see if it actually works. Okay, so that's it, and I hope you got value from this video. This is still me, Solomon Wisdom, aka Born to Trade. And if you're yet to subscribe to this channel, consider subscribing to this channel, and see you in the next video.